Welcome back, family, to another video. Now, what I want to say first off is we actually had a live stream that happened yesterday, Monday, and it didn't go so well. We had a couple altercations that actually occurred throughout the live, so we are going to be having a new live this coming up Thursday. I hope you guys are going to be able to make it. It's probably going to be around 6 p.m. PST. And then 9 p.m. EST, those are the times we're going to have it at. So I'd really recommend that you guys put in your calendars the date for that live stream so you guys can come on. You guys can gain some knowledge and actually learn some stuff from me. But what I want to go over with you guys in this video is a trade that we went into last night. And obviously, me as a trader, I don't really trade Sunday, Monday till Tuesday, Wednesday to Thursday. I usually trade Tuesday, Wednesday, and Thursday. It was kind of confusing when I was saying that. I know that, guys. I'm sorry. But I actually went into this trade on USD JPY yesterday. And there's a couple of reasons as to why I went into this trade. I'm going to show you guys exactly why we went into this trade right now. And we obviously did sell this market. But right here, like I said in the past, guys, every time that we're trading, we're looking at the candle formations, how these candles are opening, how these candles are closing. And the biggest way to know that the market is going to go a certain direction is by looking at one chart. And that is the daily time frame. And the way that we're going to know this is by looking at one time frame, and that is the daily time frame. So as I was looking at the daily time frame, at about 2 p.m. my time, when a new candle was going to open, this is the new candle that opened yesterday at 2 p.m. The candles before it for Sunday and even Friday, they appeared as a doji and a bearish hammerhead. Now, a bearish hammerhead is this candlestick right here. You guys can see that that candle had the pin to the top, right above the 20 length moving average, and the candle itself kind of closed as a hammerhead. It has that hammerhead formation right there. So this is a bearish hammerhead pattern because the pin is to the top. Now a bullish hammerhead pattern would kind of be like this one right here. Let me highlight it for you guys to see. You guys can see that the pin is to the bottom, right above the trend line right there. And after that candle formed, boom, price rapidly shot up. Here is our bearish hammerhead pattern. You guys can see that we have the pins at the top, closing right below the 20 length moving average. And then that next candle, it didn't even have any draw up. It was just complete drop from there on out. It broke the 382 zone right there. And what I want you guys to notice here is right here is a major point of support in the market. This candle right here on last week's candle, it went down, but it actually retraced back up from the zone, and it didn't even test it till today. And today, that candle completely broke through that zone right there. And like I said, if it breaks big points of support, resistance, a trend line, whatever it may be, it needs very long candles. So here's our long candle. It came all the way down here. I honestly think that it's going to break this zone and close right about here on today's candle. So at 2 p.m. today, in the next 4 hours, a new candle is going to open up to be exactly right. 3.5 hours from now, a new candle is going to appear on this chart. So you guys, what I would recommend that you do is, as I am doing these videos, if you are watching these videos right when the videos are out, I would suggest you guys, after you watch the video, you actually go to the chart that I'm looking at so you can get your perspective. Oh shit, I see exactly what he's talking about. And that's going to help you guys out in the long term so you guys can kind of understand where I'm coming from. But what we're looking for now is a sell. And as I brought my Fibonacci's up, I'm going to show you guys how I did this with my Fibonacci's. Grab my fibs right here. Fib retracement. Since we are looking for a sell, I'm going to have my fibs. Let me put this over here for you guys so I can draw it correctly. Alright, grab our fibs. 100% level is on the bottom, and our 0% level is on the top. So our next zone that we are looking for, that we want the market to go to, is this zone right between the 50% level and the 6 to 8 level right there. So these are where our take profit zones are going to be. I have my take profit right above the 6 to 8 level at about 110.760. And I'm just waiting for it to drop. Like I said, this is only one candle. We got in right at the peak right here, and we're already up 30 pips. Obviously, our stop loss was above previous resistance right there. So after it dropped 30 pips, I told everyone on my team, look, we're going to put our stop loss at our entry since the market moved 30 pips. And usually when the market moves about 30 to 50 pips, that's when I put my stop loss at my entry. So I put my stop loss at my entry, so did my whole team. And now we are just letting it ride out. This is a risk-free trade now. Market reverses and it goes to our stop loss. We're not going to lose any money and we're not going to make any money. So at this point, we're just going to let it play out. We're going to let it ride. This is a setup that I am looking at. But guys, the biggest thing that is going to help you guys determine whether a trade is going to be a successful trade or non-successful is if there is a setup or not a setup. They say no setup, no trade. So when I went into this trade, there were multiple indications that told me that this was going to be a sell. First off, the bearish hammerhead pattern. Second off, we already had the market in a downtrend. Again, we have our moving average right above that bearish hammerhead pattern, telling us that it's going to be a sell. It hit that point of resistance and is declining it, and now it's dropping. And now we're just going to let it play out, see what happens. I'm hoping for a break of the trend line to go all the way down to the 628 level. But honestly, since we have the trend line right there, we could see the market just come down to this point, hit previous support right there, and then probably retrace back up, whatever the market's going to do. But honestly, as it drops down more and more, I'm going to just trail my stop loss more and more. But guys, thank you for coming on this video. If you guys have not yet subscribed, make sure you do. Also, FX Accelerator 1 is still on sale for $297. Link in the description. And guys, do not forget about that live stream that we are having this Thursday, 6 p.m. PST. That's my time in California. If you're in New York, Florida, around the EST time zone, it's going to be 9 p.m. Put that in your calendar, guys. You're not going to want to miss this call. But guys, I will see you later.